It's March 1933. The country is in crisis. The stock market has crashed, unemployment is at an all-time high, and faith in the banking system is shattered. People are lining up outside banks, desperate to withdraw their savings. But there's no cash left. The banks are collapsing, and with them, the foundation of American economic life. In response to the growing chaos, Franklin D. Roosevelt, the newly inaugurated president, delivers a bold solution: the Emergency Banking Act.
Forces attack from other points of the compass. The doctrine that the strong shall dominate the weak is the doctrine of our enemies, and we reject it. God bless us all. God keep us strong in the faith that we fight for a better day for humankind here and everywhere.
Signed into law on March 9, 1933, the Emergency Banking Act was a turning point. It temporarily closed all banks, allowing the federal government to assess their stability. Only the solvent banks were allowed to reopen, restoring public confidence. But more importantly, it set the stage for something much bigger: the end of the gold standard. For centuries, the US dollar had been tied to gold, each dollar representing a specific amount of the precious metal. This link provided a sense of security. Money, in the literal sense, was something tangible. But under Roosevelt, that all changed. In 1933, the government suspended the gold standard, effectively breaking the tie between the dollar and gold. Now, the dollar would no longer be backed by any physical commodity. This shift allowed the government to print more money, giving it the flexibility to respond to economic crises like the one at hand. This decision in 1933 continues to shape our financial world today. What was once seen as money, gold, physical cash, has transformed into something abstract. The paper bills in your wallet, the numbers in your bank account, they're not backed by any tangible asset. Instead, they represent a promise. But what does that promise mean? What is money if not a representation of something real? We live in a world of fiat currency, money that only holds value because we believe it does. This shift from gold to trust is at the heart of the financial system we operate in today. And yet, the consequences of this move, like ripples in a pond, have spread far and wide. With the departure from the gold standard, banks gained more freedom, but so did their ability to create money. Enter the world of fractional reserve banking, a system where banks lend out more money than they physically hold in deposits. In this system, the lines between money, debt, and credit blur. Every time you take out a loan, sign a mortgage, or swipe a credit card, the bank isn't handing you real money. What they're doing is creating a promise, a negotiable instrument, a debt that will eventually be repaid. But we'll talk more about that in later episodes. But here's the question we should ask ourselves. If our money isn't backed by anything real, what gives it value? Is it the government's word, the strength of the economy, or is it simply our belief that this system works? The Emergency Banking Act was about more than just saving the banks. It was about redefining what we consider money. It was a shift that made it possible for the world we live in today, where trillions of dollars circulate every day in the form of credit, loans, and digital transactions, none of which physically exist as cash. But there's another side to this story. The end of the gold standard opened the door for inflation, the gradual erosion of your money's purchasing power. And with it, the expansion of debt became a cornerstone of modern economics. Your mortgage, your student loans, even your credit cards. These are all part of a vast network of promises, built on a system that no longer depends on anything tangible. So how does this affect you? The decisions made in 1933, nearly a century ago, still impact your everyday financial choices. You're operating in a world where what we think of as money is nothing more than a concept, a legal construct. And as you'll see in the coming episodes, understanding this is the first step toward taking control of your financial life. Next time, we'll dive deeper into negotiable instruments and the world of commercial paper, the tools that banks and businesses use to keep this system going, and how understanding them can help you navigate the maze of credit, loans, and debt. Because in this world, where promises are money, the more you understand, the more power you have.